Hey guys, Bryan Lebo here with your June Las Vegas update video. Let's go right ahead and just jump right into it. Okay, first up is the NODs, or Notice of Defaults. I monitor this activity since it tells us if and when foreclosures will reappear on our market. Now, the more NODs today means more actual foreclosures in 6 months. As you can see now on the screen, last month we filed 673 Notice of Defaults. This is actually the largest amount filed since September of last year, when we blew up to almost 4,000. That number was so high simply because banks were trying to beat the Homeowners Bill of Rights law that was taking effect in October. So, long story short, we had a really big month for NODs, but on the same hand, this is really nothing compared to the thousands we used to process every month. So, although this shows we're gearing up to start foreclosing a bit more, it's really just a drop in the bucket. So, don't expect to see many foreclosures this year at all. All right, next up is the current inventory levels. As you can see on the screen right now, the inventory levels have been brutally consistent this entire year, hovering around 6,500. Now, inventory's been increasing lately, but still, it's nothing to be concerned about. This is still a technicality, or technically a seller's market, and this low inventory has been our saving grace, since if we had 10 to 12,000 homes on the market, we'd likely see some serious price decreases. Okay, let's quickly break down this inventory. Right now, only 13% of the inventory are short sales, and only 6% are foreclosures. This leaves an amazing 82% of our inventory as traditional or, normal sales. This is fantastic news all the way around. Now, more traditional sales means overall higher prices. This also means that buyers have better options out there to choose from. All right, next up are last month's sales. Last month, we sold 2,638 resale homes. This was a large increase from the previous month. However, that's supposed to happen as we get closer to the summer months. Now, to add some perspective, although we sold 2,638 homes last month, we sold 2,894 homes last May. This means that resale home sales were down about 9% since last month versus last year, I should say. Now, that's never great news, but considering we were down 15% in April and March, and then 24% in February, this isn't so bad. Also, remember, we've lost about 20+% of sales that used to be investors. So being down only 9% means that many owner-occupants are finally buying back into the market. Now, last month's video, the big news was that the median home prices had decreased for the first time in, forever. Well, I'm pleased to say that we recovered last month again. Last month, we decreased by 1.2% for a median price of $190,000. That was in last month's video. Now, this month, we actually increased by 1.1% for a median sales price of $192,000. So we're still a little bit below the median sales price we had back in March, but this is great news. Overall, we're still up about 5% for the year. Now, considering the challenges we had going into this year, this is actually fantastic. Okay, real quick, let's look into new home sales. Now, this data is coming directly from SalesTrack, who's the leader in tracking new home sales data. Now, their reports are always about 3 months behind, but here's the deal. January sales were down 21.7% from last year. February sales were down 14.9%, and March was down 21.9%. So essentially, new home sales are down twice as much as resale homes. Now, this is very logical because now that the market is less competitive than it was a year ago, it doesn't make much sense to spend 20 to 30% more on a new home than the same home around the corner with a backyard, maybe a pool. Now, I'll discuss this in depth a little bit more later, but really quick on the screen now, you can see just how ridiculous this pricing has become. 2 years ago, builders found a way to profit selling new homes at a median price of $200,000. Now, the median price is more like $300,000. All right, for our last segment, I wanted to share a few slides with you that came from a report from UNLV's Lead Institute. Now, they're fantastic at analyzing and breaking down data. So let's check out a few real quick. First illustrates the completely absurd price difference between a resale home and a new home. In our entire history, Vegas, Nevada, we've never seen such an irrational inequality between these prices. According to them, new homes are literally 30% more expensive. This is ridiculous every time I see these graphs. Next, which is really interesting, is housing affordability. Check this out. As you can see on the screen now, during the end of our boom years, housing affordability was well below 20% of the population. We all knew this was due to exotic loans and people just stretching themselves too thin. But even with prices increasing 55% over the past couple of years, we're still up to 75% of homes sold that are deemed affordable. So in essence, we're now more affordable than we were back in 2000 even. This makes moving to Las Vegas very desirable, and it also illustrates our capacity to actually recover here. Last illustrates home equity. 4 years ago, only about 22% of us had equity in our home. In only 4 years, we've increased to about 68%. That's fantastic in every single way. The more equity people have, the more likely they are to spend money on goods and services. The more equity people have, the more likely they are to sell their home and upgrade to a larger or nicer property. Okay, so let's quickly wrap up everything. Foreclosure activity is up a little bit, but not worth really worrying about. Inventory levels are increasing moderately, but again, not worth looking twice at. This low inventory is actually keeping our market stable. We've got the best ratio of traditional home sales we've seen in years right now. And although sales are down 9%, this is actually great considering we lost about 20% of sales just from investors who, moved on. New home sales are getting crushed lately, but this shouldn't be much of a surprise to you folks. I told you guys this would happen almost a year ago when these builders started getting a little bit too greedy. Many of these new home sales tracts are sitting on inventory and they're starting to give pretty huge incentives to buyers and realtors finally. So what's the actual deal here? Well, it looks as though our market is incredibly stable right now. It doesn't look like prices are increasing at all, but it also doesn't look like we need to worry too much about prices decreasing anytime soon. We've still got about 40,000 homes that need to be foreclosed on, so I'm not so sure that prices won't decrease in the future, however. But for now, at least, we're looking very stable. Now, if you're looking to sell in the summer months are upon us right now, so it's actually a great time. Since prices aren't going up and demand naturally declines after summer, you don't really have much worth waiting for. Now, if you're looking to buy, the so-called deals are in resale homes. If you must buy a new home, make sure you work with a realtor who stays on top of this and can get you some of these great new incentives that the builders are finally offering again. But again, be careful of the new home you buy, since you might be overpaying drastically just for the luxury of having a new home. Well, that's it for June, guys. Thank you for watching. Please click here and subscribe, and have a fantastic month.